Happy New Year. This is David from Etienne's Place, Etienne Business Solutions, coming to you. Good to see you again in this new year. The last time we spoke, of course, it was last year. It was last decade, they say. So we're here and we're grateful. Whether you believe it or not, we're back to the tax season. It's almost as if it was a couple months ago that we're talking about taxes, and the different things that impacts us at this time. But we're back again, and as was done last year, this time I just want to bring us up to date, to remind some and to inform others, but to basically bring you up to date with some of the things that we need to keep in mind as we go into this tax season. Now, back in 2017, this is a quick recap. Back in 2017, we know that the Tax Cuts and Job Act was signed sometime end of 2017 that came into effect in 2018. And so having prepared our taxes in 2018, we saw the impact of some of those changes. Okay. There are a number of changes and we had gone through them sometime back. For purpose of this session, I will repeat or refresh your memory on a couple of those that are common to most individuals, common to most of us, and so bring them back to light. Now, it is true that in 2018, when when taxes were prepared, a lot of taxpayers got what I would call a very unpleasant surprise, okay? Because a number of taxpayers were not aware as the extent to which the changes would have impacted. So individuals came out very dissatisfied in a number of instances where the usual refund was significantly reduced, or what used to be a refund end up being taxes owed. And we know that that is based on a number of things that had changed. And unfortunately, taxpayers did not make the required adjustment to mitigate against those changes. Now, I will not fully ascribe blame to the taxpayer in this case, because it is true that the level of information and education that went out to taxpayers was not such that would have armed them with enough information to make the necessary changes. However, having said that, since a number of taxpayers were burnt, so to speak, in 2018, I would have expected, and I know it had been done, where I would have expected that most, if not all, tax preparers would have taken the time to educate their clients, outlining to clients what were the factors that resulted in such significant changes one way or the next. And by so doing, we'll be able to advise clients that, okay, going forward, you need to do one, two, three, ABC to prevent having such a result come 2020 when 2019 taxes are prepared. I'll do a quick recap of some of the common changes. Remember, we spoke about the deductions, okay? We talk about the standard versus itemized deductions. We mentioned that a number of persons would use the itemized deductions because they have a lot of things to deduct, and that gave them a big tax advantage. Um, as far as that is concerned, because the standard deduction was doubled, you find that in a number of cases, it makes sense to just use your standard deductions because you do not have enough itemized deductions that would naturally be greater than the standard to make it worthwhile to use the itemized. So a number of persons are going straight with the standard deduction. Very important is that a number of the itemized deductions were either removed or limited. So for taxpayers who normally find that they benefited quite a bit from itemizing. Then they realized that as of 2018, some of these things were either removed or limited, and so the benefits that they normally receive up to 2017, those benefits just went out through the window. Now with the standard deduction, doubling, then it's an offset, meaning that okay, I can go standard and still get quite a significant bite into this thing. Excuse me. Although I'm denied maximizing or using all of my itemized deductions. One such deduction that fall into that category of itemized deduction would be what is referred to as the SALT deduction, SALT, and that is really the state local taxes. Okay, the state local taxes, one of which would be your property tax. Now, you will recall that that figure maxes out at $10,000, meaning it is limited. The deduction is limited to $10,000. What does that mean? Yeah, a lot of taxpayers in different states may not be impacted because normally that deduction would be maybe 6, 7, 4, 5,000, whatever. But for individuals who reside in those states where you have very high real estate cost and value, like the New Yorkers, the Connecticut, New Jersey, etc., then their local taxes, property taxes, tend to be significantly high. And so limiting them to $10,000 as maximum deduction definitely hurt. Definitely hurt. Now, the little salvation or the saving grace is that with the doubling of the standard deduction, it sort of offset that downside that comes as a result of the limitations on the itemized deduction. That's one thing. The next thing is, oh, as a matter of fact, I should have even mentioned that when it comes to the tax brackets, remember, since 2018, there has been some adjustments in the tax brackets. Whereas on the individual tax side, the top end, the top tier was up to 39.6%, meaning that your individual taxes, depending on your circumstances, if you're a high income earner and other things, could go as high as 39.6%. That change revised it down to just 37%. So there's a benefit there. On the corporate, that is the business side, the tax rate was at a maximum of 35%, and that was revised down to 21%. So some of these things. So what you will notice is that in the list of changes, some things, are to the benefit of, something work against your particular situation. The other thing worth mentioning is what was referred to as the personal exemption. Personal exemptions up to 2017. Again, we had $4,050 was a personal exemption, and that personal exemption was for the taxpayer and the dependents that are reported on that tax returns. So you can imagine if you have two dependents on your tax returns, then you have 3 times $4,050. Okay, that is no longer, the personal exemption was actually removed. Okay, so just a quick recap: standard deductions are doubled, personal exemptions are removed, tax brackets have been adjusted so that top ends are lower than they were in the past. We have the local state and local tax deductions being capped at a certain level so that persons can only go up to $10,000. So those are some of the common changes. Now, when I say common changes, as I pointed out earlier on, that there are a number of changes, but I just want to zero in on those that will impact or affect most taxpayers. Okay, so that is very important to know. Now, but what is more important for this session for me is to bring to your attention the fact that if at the end of your 2018 tax, well, if at the end of 2019 tax season, when you had prepared your 2018 taxes, if you were not advised, or if you were advised but failed to take action in making the necessary adjustments to your tax picture, then the disappointment and the shock in some cases that you suffered then, you could repeat it in 2020 when you prepare your 2019 taxes. What am I saying here? Most tax professionals I know took the time to explain to their clients A, B, C, D, E, one, two, three, all the components or the factors that contributed to that significant change in the tax result, in the result of their tax preparation. Whether it's a case where the refund was significantly less, or what used to be a refund in prior years is now taxes owed. And I think they would have pointed out these things with the intention that you then would take the necessary action, the necessary adjustment would be made. Because here's how it works. If in prior years you were knowingly or unknowingly having less than the correct amount of taxes withheld from your salary, then up to 2017, because you were benefiting from certain exemptions and deductions and write-offs, these things came in to offset the negative impact of the inadequate withholding from salary. And so not only did you end up not owing, although you had not paid the right amount of taxes during the year, in a number of instances, you end up with an attractive refund. Now, it stands to reason. When all the things that you are depending on to prop you up are now removed, are now taken away, are now limited, or maybe totally erased, it stands to reason. If you continue to have less than the correct taxes being withheld from your salary, without those buffer or that buffer that I meant that we mentioned, then the result of your taxes are going to be significantly different and different in a negative way. So that is what happened in 2018. In 2018, you came to the table with the same less than adequate deduction from salary, okay? But then you did not have those deduction exemptions and write-offs that used to help you in prior years. And so when you come, you sit and you look shocked because, hey, disaster. So it is hoped that the advice that was given to clients, my clients, clients of other preparers, we hope that the advice was taken and it was put into action, and you went back to your employer, to your HR department, and you said to them, I need to adjust my W-4 to start withholding the correct taxes because I no longer will be able to benefit from the deductions and exemptions that had helped me in prior years. If you had not done that back in early 2019, then you're in for the same shock, the same headache. But this time, you would have caused it on yourself. Because you see, in 2018, in all fairness, most persons were caught unaware. You know, you're not too sure what will happen, how it will happen, or will this impact me, etc., etc. But having prepared your 2018 taxes and seen the result, you are now armed with information that you can sit and look through your tax returns and compare with your 2017 and see what you were denied in 2018 that you used to benefit from up to 2017 and make the necessary adjustment. Go back, have your W-4 adjusted accordingly so that come 2020 now, when you're preparing your 2019 taxes, you will not get such a disconcerting news that refund minuscule, or no refund, taxes owed. Okay, so this is speaking to taxpayers. So I'm now referring to my fellow tax preparers. We're always knowledgeable of the importance and the value that tax planning brings. But it is now the time for us to re-emphasize to our clients the importance of what I call all year tax planning. The days of totally ignoring everything to do with taxes until tax time hopefully is over for each and everyone, because you by now you should recognize that to take that approach is really to court disaster. Okay, so tax professionals, CPAs, accountants, financial advisors, you name it, we have a critical role to play to educate, to inform our taxpayers on the importance of paying careful attention, monitoring and managing their tax profile, their tax picture, their tax lives throughout the year, so that they can make the right decisions and make the proper adjustments as is necessary, so that come tax time they're not in for this unpleasant situation. Okay, so my hope is that as my clients start to flow in, I will see that my word of caution, admonition, etc., were adhered to throughout 2019. It is unfair. It is grossly unfair and unethical that a taxpayer would knowingly know what was the result in 2018, fail to take the necessary action to mitigate against it recurring in 2019, and so come, or you visit your tax preparer with your W-2, you had not made any necessary adjustments to your W-4, and so you still have less than adequate taxes being withheld from your paycheck. Yet, you come to your tax preparer and you hand them that W-2 and other tax documents, and you're expecting, and in some instances, demanding a miracle. And if you do not get that miracle, then you you start to ascribe incompetence and ignorance of the tax law on the poor tax preparer, because you're expecting a miracle. Great things can happen, but you first need to do what is required of you. Having said that, for those who had not taken steps throughout 2019 to prepare for this tax season, it is now January of 2020. Tax season 2021 will come. And so I advise you, go into your HR department. It's now January, it's now the time. Ensure to check on your W-4, make the necessary adjustments so that you will come out where you need to be, where you want to be. Okay, you can make the adjustment in a way that causes you to roughly break even, or you can make the adjustment. But the critical thing that you want to make an adjustment that will take care of the fact that you can no longer benefit from some of those prior deductions and exemptions, etc., that you had coming your way in prior years. Okay, so that's my little bits to you. We're going into the tax season, and I know it's going to be hectic, and I'm looking forward to seeing my clients. But all in all, I want to wish you a real prosperous, 2020. I read props for 2020. I encourage you to work hard. And if you're a business owner, I know the challenges are there, but then hey, just keep your shoulders to the wheel. So let me once again remind you. I've been reminding my clients, friends, strangers, everyone about our winter seminar. So a quick recap. ATN Business Solutions is now, launching the winter seminar, and this is entitled Cash Flow Management for the Cash Strapped Manager. That's cash flow management for the cash strapped manager. This will be on Thursday, January 24 at the Conyers Rockdale Library starting at 4 p.m. Starting at 4 p.m. It is a free seminar, no cost, $0. However, you are required to register. So you need to go online, www.myebsolutions.com. That's my, E as in Edward, B as in boy, solutions.com, and register, because we need to know the numbers who will be in attendance so we can make the necessary preparation. So once again, it is our winter seminar entitled Cash Flow Management for the Cash Strapped Manager, and this will be held at the Conyers Rockdale Library. That's next Thursday, which is January 24th. As a matter of fact, we had, and as I said before, it's a free seminar, but registration is required. We had scheduled our cutoff for registration to be this Thursday. But I must admit that we have had such favorable responses of persons wanting to attend that we have decided to extend it. So you have until next Tuesday. I think it will be like the 22nd, I think, next Tuesday, because the seminar is a Thursday, which is the 24th. So you have until next Tuesday to register. Okay, register so that we can make the necessary accommodation for you. So looking forward to seeing you there. Cash flow management for the cash strapped manager. Free seminar, but you need to register. Okay, so there we have it. David Etienne from Etienne Business Solutions. And of course, I know a lot of you have been checking out my regular Etienne's Place. So you can always remember now you need to go on, subscribe so you can have access to all of my prior and to come video presentations where I'll explore various topics that on subject matters that were brought to my attention by clients, who say, okay, David, why not share this with us, this topic or that? And so my presentations usually, is a reflection of those things. But naturally, because we're now in the tax season, between now and the next maybe 2 months, then most of our presentation will be focused on taxes, because that's really where it's at right now. That's what people are interested in, are anxious to know, to learn about. And so that's what it will be. So thank you once again for joining me at Etienne's Place, and I look forward to seeing you in the coming week. And have a good rest of the week. It has been pretty wet, not cold, which is good, but pretty wet, so stay dry and try to avoid, what I call the unusual weather that is causing a lot of coughing everywhere you turn. But anyhow, so be safe, take care, love your family, love your friends, love your neighbors, work hard, trust in God, and all will be fine. Okay? I catch you in the coming week.